good morning, everybody. It is Thursday, November the 10th, and it is CPI Day. Right before we get started here, anything prior to CPI coming out is an absolute guess. It's an educated guess, but it is a guess. Few that remember a month ago when CPI came out and it was fractionally hotter than expected. The market took a complete tank, put in the year to date lows there on October 13th, and we had an absolute rally. I, if you remember, was pounding the table there prior to the open. Very, very, very bullish. We were up, ended the day plus 2.6% in the email. I'm going to include the prior CPI days, but I want you to remember we are not in the middle or in the early stages of CPI. We are in the ending stages of CPI. So, as we saw a few weeks ago, Germany, worse than expected CPI, near 11%, market was up. Same thing over in the UK, higher than expected CPI report, market was up. So, again, try not to overbear yourself because yesterday did not break down below our levels that we had predicted for, but it did break down below the levels that we sat there and believed in. Myself at least, being that 3765. Coming to that, I'm showing you here Bitcoin, and this is the chart for Bitcoin for this week. 2586 was a pivot that I've had for a very long time, going way back into 2017. That was where you topped out back in 2016, if you remember when Bitcoin first started, or 2018, when Bitcoin started trading on Thinkorswim and a couple of other things. You went up there, you were holding it at the beginning of the week. Then you came up here on that bounce when the FTX news started to come out. Yesterday was an absolute crash. Yesterday was a margin call. Margin calls are going to hit the same place because theoretically, people that eat steak don't have a stockpile of Beyond Meat food. They stick with steak. So, your heavy weighted tech stocks, your Amazon, your Tesla, your Apple, all of those would be in your margin call positions, and that's why the margin call started coming in. You had that drop on the SPX, and we broke down below that 3765 level, which while we're here, I might as well just type it. SPX, we broke right below that 3765, the 50% retracement, that price pivot came down here to 3744. This is the week to date. And it's a good thing it's the week to date because I'm going to go over and start backwards before I go forward. But I will bring you on to here. Market Rebellion, Pete Najarian's thing that he's got going on, $9,000 a year for a membership, throwing out three different tickers every day. Tesla wondering when Elon will be back from grabbing milk at the store. You know the old story about father goes out to buy milk, never comes home. And this was just, it was hilarious. So, it was one of those things I had to share with everybody, put a smile on your face. Anyway, come back again. Yesterday, closed near the lows, down there below 3765. 3891 was the top level. 3731 was the lower level. Never came down to it, never tested it. The 3830, 3835 that I was most confident with, 42%, because we were going to close red. The 3745, 3740s, as much as 22%. The 3855, 3860s, they traded at $1. So you got yourself there again, 25% on that. In the middle, going there when we were trying to chop around at the end of the day. Again, this is why you go into your day, you got a plan, you stick with your plan, you focus on your plan, and you leave the plan alone. There's going to be a lot of opportunities for other things out there, but again, yesterday 3765 got ran over, 3750 got ran over. Again, it's that what happened to me over here back on October 14th was getting cocky, and getting cocky thing just did not work out. So, yeah, that's where we're at. But again, going backwards, Tuesday, when I threw out the email there on Tuesday, I showed this is what we were looking for here on the SPX. Something like this for a throw over. and then down here to around that 37.64. We got the throw over. We got up there to 38.55, and you got your throw over there. Yesterday, again, going backwards, I had those three trades that were out there looking for, again, here down in this zone, looking for something down in that zone. All we were doing because of what happened there with that margin call was just continue to fail. And again, you just came down and came down and came down further. This was, again, the PDT trade from the day before. There was an opportunity in the morning to close this out right around 30 cents. You got about 70 cents credit. The safe-ish, again, 38.60, 38.55. That was pre-market. The need to drop, again, going down here. This did not work out. It was there. I didn't throw it out there when we were looking at it, but we were looking for 37.80, 37.65 for the support level. Did not work out. This was why over in the chat, what I had posted was that right up on the top, 38, 35, 38, 30, 38, 60, 38, 55, and then the safest being the 37.40, 37.45s. And again, all of it wound up working out. So again, if you didn't get to play yesterday or you got into the trade late and got ran over on it, don't worry, it happens. But again, this is why you anticipate, you monitor, and you adjust. And when I say adjust, the most important thing when you're adjusting is that you already know how much you're willing to lose and you put your stop loss in there. Again, here, going while we're on these, because again, you know, CPI coming out, all we're doing, we're guessing for it. So nothing to do until the report comes out. Absolutely nothing. But I am very, very happy that we did get a visit up here to 26.57 on the VIX. The VIX I showed yesterday, there was about 3-1 calls to puts being bought. And that 3-1 was all pennies. They were 2-cent calls and 8-cent calls. Nothing in large extreme dollar volume. It was just that the contract volume was very large and again very, very small. Could easily be people that were just covering. I have absolutely no idea, but it was a 3-1 ratio on the calls. Didn't see anybody loading puts up on anything large, SPY, QQQ, Apple, Tesla. Didn't see any of it out there. But again, here, from that drop off of 34.88, we did get over here and get a retracement to the 23.6. So at least it's a little bit of a minimum. If you wanted to look at this as a 1, 2, 3, you got your 1, you got your 2, you got your big 3 here, and your 4 should not be able to get anywhere higher than 28. We'll see if we can get a spike off the CPI. Not required, but again, happy that we got that 26.57. Tesla, this is a 30-day view on Tesla, down 100 points. I know that there's other green bars here that I've got to fill in this level for the gap down. But again, got right down to the stock split high, 179.58. The tweet, it does speak volumes because, yes, I agree. He has completely turned his back to Tesla, and everything that comes out of his mouth is Twitter, Twitter, Twitter. All he's got to do is go and post 3 different tweets out about Tesla, and everything's back on track. The US dollar, the dollar index, we came right down to that 109.144. Just about nicked it the other day on Tuesday, and here we are again, rushing back up near that 50-day moving average as we're in this just slowly descending lower lows, lower highs kind of situation that we've got on it. But again, come over here onto the futures. The 4-hour got oversold yesterday. When the 4 hours get oversold, it's the time to start getting really considerate about being able to look bullish. You got a 4-hour oversold over here. You had a 1-hour oversold over here. 1 hour is already getting a little bit extended because it was getting a little bit too beat up yesterday as it was just grinding down lower and lower very slowly during the course of the week. And here we are, we're already back up to the 64 level. But again, that one level right there, that 100-day moving average, that 39.07, that's going to continue to be a little bit of a problem for the bears as we move into Thanksgiving, as we move into Christmas, because the market wants to look at that 100-day moving average. The market wants to look at that 200-day moving average, which hasn't been seen since August when we tagged it. and it wants to look at that 50 retracement of the drop from the all-time highs up here around 41.55 as we go into the final days and weeks of the year. So again, nothing to be able to go out there and throw and say this is exactly what's going to happen from CPI. We're here to react. We're here to look at it. But again, you know, we're doing pretty damn well. And I again got another private message yesterday from one of our members who took out her winnings for the week. For the week, $8,000, and she replumbed her entire house. Money's there, guys. The money is there.